For more on the latest numbers, the state of the economy, and the outlook for inflation in the year ahead, let's turn to Jesse Anttila-Hughes. He's an associate professor and the current chair of economics at University of San Francisco. Jesse, welcome to the program. What do you make of these numbers?
Thanks for having me. Well, I'd say that most of us are kind of waiting to see what happens with the global economy. There's a variety of things going on with growth in particular and the tariffs and how they interact. And I think the principal thing to take away is, like we saw at the end of the last segment, it looks like at best it's a bit of a K-shaped recovery. We've got a lot of spending at the high end, but a lot of that seems to partly be related to people front-loading consumption to get out of tariffs. And so one of the major concerns that we have now is, well, we had a pretty strong growing economy going into the beginning of the Trump presidency last year. A lot of the uncertainty that we have related to things like Greenland and the behavior at the Fed and similar is making it harder for us to take these growth numbers in a positive way.
And talk about this K-shaped economy. Tony Waterman, our reporter, mentioned it in her piece, basically the widening gap between wealthier Americans versus lower income households still struggling to make ends meet, struggling with higher prices, and not everyone has an investment portfolio or a 401k plan.
Exactly. And I think critically, this is a nation of over 300 million people. And when we talk about the economy overall, there's the aggregate numbers, but what are people's actual livelihoods looking like? And so we see for most of Americans, the cost of living continues to go up. And we are now getting a lot of very unhappy outcomes in labor markets, especially for younger people. We don't see massive rounds of layoffs yet, but we don't see particularly good hires. And so this is the kind of period where you would really want the executive to be leaning in, reinforcing notions of stability, helping us to think about how we can build an economy that's going to work for everyone. Instead, what we're seeing is a lot of the worst income inequality and wealth inequality problems from last decade seem to now really be compounding. So we're getting a lot of robust consumer spending, but by a small number of high-income households, while a lot of other people are not doing that well.
What are the inflation risks going forward, Jesse? Does this growth raise concerns about renewed price pressures?
Absolutely. And I mean, I think there's two considerable questions here. The really big one is the damage to the rule of law itself, right? Part of why we like to invest in US government-backed securities is because they are stable and we know how they're going to behave. And so the recent extremely erratic behavior by the US executive branch is making it difficult for investors to take that at face glance. And so we both see inflation creeping up a bit compared to where it was, say, a decade ago. But the expectations of possible future inflation, if Donald Trump is able to put someone in as the new Federal Reserve chair in the spring, and we can get that person to lower rates, we would get a short-run explosion in growth, but at the cost of probably very serious long-run inflation. That's the sort of thing that macroeconomists are particularly worried about.
Well, you mentioned
out the power of the purse on purpose.
Apologies, I interrupted you. You mentioned the Fed. How much is this latest data on the third quarter or GDP? How much do you think is going to play a role in the Federal Reserve policy's decision when they meet next week? As you know, Jerome Powell has been repeatedly criticized, repeatedly attacked by Donald Trump for being too slow when it comes to lowering interest rates.
Yeah, I mean, I think I would go back to a bunch of our commentary from this summer, which is that no credentialed economist would take the views that the current administration is pushing. They push against basic Econ 101 type understandings of how this sort of stuff is supposed to work. And so the president wants to potentially lower rates, and I'd say him and people like Lutnick that are arguing for lower rates are doing so for the same kind of small-scale parochial reasons that motivate them to threaten to take Greenland. It's not actually general American interest. And this is the sort of painful lesson we learned last century. Federal Reserve independence, central bank independence, is a cornerstone of modern democracies, and the only places that we see taking that away are places like Russia or Turkey under Erdogan.
The administration seems very optimistic about GDP for 2026, and the Atlanta Fed's GDP tracker currently projects fourth quarter growth at 5.4%. Jesse, how realistic is that, and what does it suggest as we head into 2026 and all this optimism from people like Howard Lutnick?
Well, I think Much like a lot of the other policies that we've seen here, there's a reason why people talk about the taco problem. Trump always chickens out. There's an extent to which we get a lot of bluster up front, and then we see how things actually come due. And we can think about this whether or not it's the administration taking action against specific political or economic agents it doesn't like, or even just simple things like what is going to be the impact of a policy. And so, I am not a professional forecaster, so I can't necessarily speak to whether or not that's a realistic forecast. It does sound high compared to where we've been for a while, especially given a bunch of the other fundamentals that we're seeing and the impact of things like the tariffs on very hard to predict things like equilibrium behavior in trade.